Hey, what's up guys? In this video I want to talk about the Federal Reserve and their love for money printing and what consequences this has for you as an investor. We're going to talk about inflation expectations, and the US dollar as a global reserve currency. You are not going to want to miss this. So if you're new to the channel, my name is Dan. I do a lot of stock analysis and investing videos on this channel. So if you like that kind of thing, hit that subscribe button to see more videos like this one. Alright, let's get started. Do you like money? Jerome Powell loves money. Here's a chart of the M1 money stock. This includes all the cash in circulation, all the checking accounts, and a few other things. So it generally creeps up over time, but look at what's happened here in the past year. The money supply was, close to about $4.5 trillion. All of a sudden, we're at about 18 trillion. So if I can zoom in a little bit, just look at the past year, pretty sharp increase. And we keep pumping more money into there every month. Now, if you guys notice at the top of the screen, it says this series will no longer be updated. We have a new substitute here. So the Federal Reserve is no longer releasing data on the M1 money stock on a weekly basis. If you click the link here, it will take you to a new series called M1 with an S in there or something. Okay, so they're still going to release it, but it's going to be monthly. You can have the same thing can be observed here for the M2 money supply. They're not going to keep doing it weekly, it's going to be monthly. Very interesting. So this begs the question, why is the Federal Reserve hiding this data? It's been provided weekly every week since about 1970. So what's going on here? Well, I think the answer is quite simple. I think the Fed would like you to stop paying attention to all the money being printed. You can see this in a lot of their commentary. They focus on the interest rate level. They talk about things like that. They're trying to say, hey guys, don't pay attention to all these trillions of dollars being printed. In pretty much any public commentary, they see inflation as being under control. Again, here on February 23rd, Powell is saying that inflation remains low. So the Fed is trying to control inflation expectations of everyone. Now, the reason they're doing this is because the actual expectation of inflation can be kind of a self-fulfilling prophecy. If everyone expects high inflation, it tends to lead to high inflation. So the Fed is coming out and telling you, no, there's no concern about inflation, even though we just quadrupled the money supply, no need to worry about that inflation. But, and I want to see if I'm alone here, hit me up in the comments below, I am definitely seeing inflation where I live. So of course, everyone is worried about inflation, but an additional related concern is the US dollar status as the world's reserve currency. So with the Federal Reserve printing so much money, diluting the value of US dollars, a lot of other countries may not feel so cozy about holding those US dollars. This could be a big shift. Right now, US dollars is still the world's reserve currency. Over 80% of all transactions internationally take place in US dollars. And the reason for this is that at the end of World War II, the United States was the world's superpower. We were the winners of the war. We had just finished kind of flexing our muscles with Hiroshima and Nagasaki. In other words, the US was superior technologically. And so we decided US dollars are going to be the world's reserve currency. And because of the power the US had at that time, we were able to get away with that. Some other countries wanted kind of a basket of currencies. The US said, no, US dollars. We then created the petrodollar system. We had all of the oil producing countries like Saudi Arabia and all of those, we had them essentially agree to only sell barrels of oil in US dollars. Don't accept any other currency. Now again, this was a power play. This was a move we could make at the time because we were the largest consumer of oil. But it's a very interesting system, isn't it? It's called the petrodollar system. It means that every other country needs to get US dollars in order to get oil. What this means is we have to run a continuous deficit. By that I mean a continuous trade deficit. And that is what we do. Now, for other countries, there are major drawbacks to this whole system. Essentially, everyone is kind of dependent on one country, the United States. This flaw in the system kind of came to light around the 2008 financial crisis. And to make a long story short, the other countries have really not forgiven us since then. In fact, although it's not really a major story you're going to see in the media, a lot of other countries are starting to trade in not US dollar denominations. The Chinese yuan has joined the euro, the Japanese yen, and the Swiss franc in the IMF's special drawing rights basket of currencies. Because of how irresponsible the Federal Reserve has been, I think there's a pretty good chance that special drawing rights basket really becomes the world's global reserve currency in place of the US dollar. Now, why does all this matter to you as an investor? Well, let's think about it. The US is in a very privileged position right now. They can literally print their own money. All other governments don't really have that privilege. If they want money, they have to borrow it. They can only do that because they are the world's global reserve currency. If that status is taken away, all of a sudden they don't have that power anymore. And what do you think would happen to the value of US dollars if they're not a reserve currency anymore? A US dollar is just like any other good or service. It has a value based on its usefulness. US dollars are currently very, very useful. They're the only thing you can use to buy oil. But clearly, if that status goes away, their usefulness is going to go down. So what to do about it as an investor? Well, I think number one, very clearly, don't be holding US dollars. It's not going to end well. The charts I just showed you, they don't even reflect the current stimulus bills that are being pushed through Congress right now. So get away from cash. If you have to hold some kind of currency, I do recommend Bitcoin or something that will hold its value a lot better than dollars. Number two, if you can borrow money, do so. Borrowing in the form of, say, a mortgage is a really great thing to do right now because, as you pay that money back, that money is not going to be worth very much at all, so you're going to come out the winner there. At the same time, because borrowing is so good right now, don't lend money, okay? Don't buy bonds. And really, it would not be a bad idea to have some of your money in gold or silver or other commodities like that. You gotta think about it, guys. Not as many people are working. There's fewer goods being produced. And there's more and more dollars chasing those fewer goods. We're going to either see inflation or hyperinflation, one or the other. One last word of caution. You can go on the government's website. You can look up CPI, Consumer Price Index. This is the government's measure of inflation. Be very careful when interpreting that. Asking the government to report on inflation is kind of like asking the mafia to report on a crime. I'm stealing that quote from someone, but it's very similar, guys. They're going to tell you there's no inflation. They mess with that index. They change the numbers. If the price of steak goes up, they take steak out of the basket of goods in CPI and they put in chicken. Okay, that's how they manage it. They also do not include the cost of housing in the CPI. But last time I checked, you gotta have a place to live. So it's very misleading. Make no mistake about it. We have inflation coming. Alright, that's all I got for this video. Hope you guys liked it. Thank you for watching.